Good morning, good afternoon, good evening. My name is Market Maker 69420, and in this episode, we're going to go over the market open and how that affects the economy. As global financial markets grapple with ongoing macroeconomic uncertainties, including inflationary pressures, geopolitical tensions, and shifting central bank policies, today's trading landscape presents a mix of opportunities and risks. This detailed analysis delves into stock, commodities, and cryptocurrencies market, explaining key indicators such as futures movements, economic catalysts, technical setups, and sentiment drivers. By breaking down these elements, investors can gain insights into potential momentum, volatility peaks, and sector rotations, helping to inform strategic decisions in an increasingly interconnected financial ecosystem. All right, let's look at the stock market. When looking at index futures and pre-market gap, major index futures, including those for the S&P 500, Dow Jones, and Nasdaq, are showing modest pre-market gains today, with S&P 500 futures up approximately 0.3% after gapping higher from yesterday's close. This gap reflects overnight optimism driven by positive earnings report from tech giants, though traders should watch for gap fills if early momentum fades. Pre-market gaps often set the tone, and a sustained break above key resistance levels could signal bullish continuation. When looking at pre-market movers and volume, notable pre-market movers include Tesla, up 4% on strong delivery numbers, and Nvidia, down 1% amid chip supply concerns, with volume spikes in AI-related stocks indicating sector-specific interests. Overall, pre-market volume is elevated compared to 200-day average, suggesting institutional participation, but thin liquidity could amplify swings once the regular session opens. When looking at economic calendar and news catalysts, today's economic calendar features key releases like the U.S. ISM manufacturing PMI and construction spending data, which could influence Fed rate cut expectations. Recent catalysts include dovish comments from ECB officials boosting global appetite, while escalating Middle East tensions added downside risk. Earnings session remains a focal point, with reports from companies like Apple potentially acting as market movers. When we look at market breadth and internals, market breadth is improving, with advancing stocks outpacing decliners by a 2-to-1 ratio in pre-market scan. Internals show strength in the advanced decline line for the New York Stock Exchange, but the McClellan oscillator remains neutral, hinting at potential overbought condition. A divergence here could signal weakening momentum if highs fail to expand. When looking at the volatility gauge, or the VIX, often called the fear index, is hovering around 15, down from recent peaks above 20, indicating reduced short-term volatility expectations. However, amplified volatility in options markets suggests traders are pricing in potential spikes around upcoming elections and economic data, making it a key watch for hedging strategies. When looking at technical setup or a technical perspective, the S&P 500 is testing its 50-day moving average as support, with a bullish flag pattern forming on daily chart. RSI is at 55, avoiding overbought territory, while MACD shows a bullish crossover. Key levels to watch include 5,500 as resistance and 5,300 as support. A breakout could target all-time highs. When looking at sector leadership and macro link, technology and consumer discretionary sectors are leading, linked to robust GDP growth and AI hype, while utilities lag amid rising yield. Macro links include sensitivity to Treasury yield, 10-year at 4.2%, and oil prices, with a stronger dollar pressuring multinational earnings. When looking at positioning and sentiment, investors' sentiment is cautiously optimistic per the American Association Individual Investors Survey, showing 45% bulls versus 25% bears. Positioning data from CFTC reveal net long positions in equities at multi-month highs, but overcrowding in tech could lead to unwinds if catalysts disappoint. Moving over to the commodities market, when looking at gaps from prior settlement and initial momentum, crude oil futures gapped up 1% from yesterday's settlement, driven by initial momentum from OPEC's production cut rumors, while gold is flat after a slightly downside gap. This early price action suggests bullish sentiment in energy, but traders should monitor for reversals if momentum fails to sustain above key pivot points. When looking at key reports and inventory data, upcoming EIA crude inventory data is expected to show a drawdown of 2 million barrels, potentially supporting prices amid summer demand peaks. For metals, Chinese manufacturing PMI reports could influence copper and iron ore, with recent data pointing to stabilized demand. When looking at US dollar correlation, commodities are showing an inverse correlation to the US dollar, which has strengthened slightly today, DXY up 0.2%. A weaker dollar historically boosts commodity prices, but current dynamics could pressure exports if greenbacks continues its rally, particularly for agricultural goods like soybeans. When looking at technical indicators, WTI crude is forming a head and shoulders bottom on hourly charts, with RSI above 60 indicating bullish bias. Gold's 200-day moving average provides strong support at 2,300, while Bollinger Band suggests expanding volatility. Overall, technicals favor upside in precious metals if global risk aversion rises. When looking at supply and demand and macro drivers, supply disruption in Libya are tightening oil markets, while robust U.S. demand offsets recession fears. Macro drivers include inflation hedging, boosting gold, and green energy transition, supporting battery metals like lithium, though slowing Chinese growth poses downside risk. When looking at commodities, indices, and benchmarks, the Bloomberg Commodity Index is up 0.5% today, led by energy benchmarks like Brent crude at $80 a barrel. Agriculture indices lag due to favorable weather forecasts, but industrial metal benchmarks show resilience tied to infrastructure spending. When looking at liquidity and volatility windows, liquidity is highest during U.S. trading hours, with volatility windows around investment release. Expect amplified moves in low liquidity periods like Asian close, where thin trading can exacerbate gap. Moving on to the cryptocurrency market, when looking at overnight Asian sessions and gap, Bitcoin gapped up 2% from overnight Asia session, reflecting strong buying in Tokyo and Seoul markets amid yen weakness. Ethereum follows suit with a 1.5% gap, but altcoins like Solana show mixed gaps, indicating sensitive momentum as Asian liquidity drives early price discovery. When looking at correlation and risk assets, crypto maintains a high correlation, 0.8%, to risk assets like the Nasdaq futures, rising in tandem with tech stocks today. However, decoupling risks emerge if equity volatility spikes, with Bitcoin acting like a digital gold hedge during broader market pullbacks. When looking at on-chain metrics real-time snapshot, real-time on-chain data shows Bitcoin's active addresses up 10% in the last 24 hours, with transition volume spiking to 50 billion. Ethereum's gas fees are moderate, signaling healthy network usage, while whale accumulation, while it's holding over 1,000 Bitcoin, have increased, suggesting long-term holder confidence. When looking at derivatives data, open interest in Bitcoin's future is at 30 billion, with a long-short ratio of 1.2 to 1, indicating bullish skew. Options data reveals high call buying at 70,000 strikes, but funding rates are positive, hinting at potential over-leveraging and liquidation risks if price dips. When looking at ETF flows and institutional signals, spot Bitcoin ETF flows turned positive last week with 50 million inflows led by BlackRock's IBIT ETF. Institutional signals include MicroStrategy's latest Bitcoin purchase, boosting sentiment, though regulatory scrutiny on stablecoins could tamper enthusiasm. When looking at technical setup, Bitcoin is consolidating above its 200-day moving average at 60,000, with a symmetrical triangle pattern on the 4-hour charts pointing to a potential breakout. RSI at 58 is neutral, and Fibonacci retracement suggests resistance at 65,000. A breach could target 70,000. Looking at news and sentiment, positive news around potential U.S. crypto-friendly policies post-election is driving sentiment, with social media buzz, Google Trends for Bitcoin at yearly highs, amplifying retail interest. However, bearish undertones from Mt. Gox repayments could introduce selling pressure. Looking at the market analysis as a whole, in summary, the stock market exhibits cautious optimism with tech leadership and improving breadth, though volatility remains a wild card amid economic data. Commodities are buoyed by supply constraints and macro hedges, with energy showing particular strength, while cryptocurrencies mirror risk-on sentiment but face institutional and regulatory hurdles. Overall, markets appear poised for moderate upside if catalysts align positively, but investors should prepare for volatility driven by U.S. dollar strength and geopolitical risk. Diversification and close monitoring of technical levels will be crucial for navigating this dynamic environment. That's all I got for you guys today. Don't forget to like, comment, and subscribe if you like this episode, and feel free to buy me a coffee on my Patreon if you want to support the channel. Other than that, thank you. Bye-bye.